Last week, the Federal Reserve made headlines when it announced its decision to keep the benchmark overnight borrowing rate in the range of 5.25 to 5.5%. This was largely anticipated by the market and shows that the Fed continues to combat inflation. Additionally, it's crucial to keep an eye on the economic events scheduled for this week. In particular, watch out for the following: new home sales on Monday, durable goods orders and consumer confidence on Tuesday, and finally, don't miss out on Thursday's jobless claims and consumer sentiment. Meanwhile, big tech is dealing with some big problems. Antitrust regulators on both sides of the Atlantic are cracking down on alleged anti-competitive practices. This could lead to breakup orders for Apple and Alphabet's Google, marking a first for the industry. Switching gears now to the world of energy, oil prices have been on a rollercoaster ride recently. Unrest in the Middle East and supply disruptions have led to severe price fluctuations, causing jitters in global markets. As geopolitical tensions continue to rise, the oil market remains unpredictable. Analysts warn that the volatility is likely to persist, with future prices hinging on diplomatic resolutions and the global response to these ongoing conflicts. Stay tuned as we delve into the government's latest spending package next. In other news, the threat of another government shutdown was narrowly avoided. President Biden signed off on a $1.2 trillion spending package. This comes after the legislation received bipartisan support and rushed through a series of congressional votes. Anticipating the week ahead, Monday heralds the unveiling of the new home sales report, offering a window into the state of the housing market. Throughout the week, our attention will remain fixed on housing data, underscoring the economic calendar. Tuesday brings the release of consumer confidence measures alongside the announcement of durable goods orders, adding further layers of data to monitor. Adding to the financial agenda, earnings releases are set to be relatively quiet, with Walgreens Boots Alliance and McCormick being the biggest companies by market cap report results. On Thursday, investors should watch out for the GDP and jobless claims data. The natural gas report is set for release on Friday. Additionally, investors should stay vigilant as the Personal Consumption Expenditures Index takes center stage. Despite markets being closed for Good Friday, the release of this index could provide valuable insights into the Fed's preferred gauge of inflation. Last week, the stock market responded positively to the dovish messaging from the Fed. The S&P 500 traded higher by 2.2%, and the Nasdaq 100 was up by 2.8%. Societe Generale has emerged as the most bullish investment bank, lifting their S&P 500 year-end forecast to 5,500. Some analysts believe that there's no stopping this record-breaking rally, buoyed by an improving outlook for corporate earnings and the buzz around artificial intelligence. In the interest rate futures market, traders are starting to price in a 25 basis point rate cut in June. The Federal Reserve maintains its plan for 3 rate cuts in 2024, and despite slightly higher inflation forecasts, it continues to expect inflation to fall. Interestingly, the Swiss National Bank unexpectedly cut rates, adding to the sentiment of broader central bank easing. While the Fed is dovish on short-term rates, it sees long-term rates eventually rising to a new equilibrium point of 2.6%. As we move into this new week, the market continues to be a fascinating spectacle of moving parts. The question remains, how will these elements interact? And what will be the resultant impact on the market landscape? Only time will tell.